Jane Street made money. Many Indian small investors lost money. And the amounts are staggering.
On the options market, frankly, and this is where the dilemma of India lies, is that we have a lot of retail participation, people who may or may not understand options.
How this game is played.
Correct. So India is all about bubbles because our economy is of a size where bubbles can get easily formed.
India allowed small people to get exploited, big people to make money to push up the markets and create an illusion that India had a vibrant stock market. Hi, this is RN Bhaskar from Bhaskar Ki Business Baatein. This is a channel that comes to you with policy analysis, conversations like the one we're going to do just now, and an occasional business story. And today, for this conversation, we have Abizer Diwanji, who's a friend, philosopher, guide to me, and one of the most amazing thinkers for the capital markets and the financial markets in the country. His background qualifies him to do that. He was a senior partner at KPMG. Then he became the chief executive of the country's largest redevelopment project, the SBUT. And then he joined EY as a senior partner in charge of the restructuring business. So his knowledge of finance, his knowledge of markets, his knowledge of underlying values is immense. And so we thought, Abizer, first, thank you very much for coming here.
Thank you.
And I want to pick your brains about something that everyone's been talking about for the last 1 month. Some with reasonable degree of success, some with a lot of distortion that takes place whenever there's a controversy. And the story is that of Jane Street. And there are 3 issues here. What is Jane Street all about? And the second is, who was wrong? Jane Street or the regulator? And the third one is today's equity markets. Are we not creating another bubble? So all the 3 are linked to the markets.
Yes.
And I want you to help me understand the 3 parts. So let's go back to Jane Street. What happened in Jane Street?
Yeah. So for this talk, Bhaskar, I'll have to wear my financial services hat as against my restructuring hat because that's more useful. So Jane Street, very simply put, is a trader in derivatives as well as cash markets globally. Now what they did really is they bought stocks in a particular company. Let's take Nifty, for example. They did it in Nifty, so let's talk Nifty. And Nifty Bank.
Yes.
So they bought stocks in Nifty Bank, underlying stocks of Nifty
The
Bank.
indices.
No, also the underlying stocks.
Okay.
So they bought the indices as well as the underlying stocks in the market, in the cash market. And basically what happened as a result of that, and they did phenomenal volumes. Volumes to the extent of 25-26% of daily volumes. And by the way, they traded only on option expiry dates. So that's important to note. They traded only on option expiry dates. Now what happens on option expiry dates is people get desperate to square positions. Just keep that in mind. Now what happens at that point in time is, say, early in the day, you start taking positions. As you take positions, the Nifty Bank goes up because you're taking buy positions.
Correct.
When that happens, now what happens in the options and futures market? In the futures and options market, the option premium on the call rises. Now, basic understanding of the call markets is that whenever there is optimism in the underlying stocks or the indices, the call premiums go up. Call means the right to buy goes up. And because there is lower pessimism, the right to sell or the put option goes down.
Yes.
So what a trader like Jane Street would do is, in that options market, they would end up writing call options. And when they write call options, they collect premium. So when they start buying and Nifty goes up, the premiums go up because more and more people want to subscribe to call options, and somebody like Jane Street writes them and collect premium. Whoever writes an option takes a position and collects premium. Similarly, the premium on the put goes down. So what Jane Street does on the other side is goes and buys those
Put option.
Put options at a cheaper rate.
Yes.
Because that's pessimism, optimism in the market. Optimism lasts in the mornings when that happens. Towards the end of the day,
It buys the puts.
it reverses the position, sells the stock. Pessimism sets in. The calls expire because they've collected the premium. Nobody exercises those calls. And they go and play in the put market where the premiums have risen.
Yes.
So that is what, the squaring of positions, they make money. So they'll lose some money on the equity side, I presume, because they would buy high and sell low. But on the premium market, they end up gaining significantly because they've written significant premium and they've earned money on squaring up of their short positions. So this is how this trade works. Now, the aspect that is not discussed, the aspect that is discussed is, oh, are you manipulating the cash markets to play in the options markets? The negative part of it, or the other side of it, is when you're actually selling in the cash market, somebody is making money out of that
Yes.
position. There is a counterparty to every transaction. On the options market, frankly, and this is where the dilemma of India lies, is that we have a lot of retail participation, people who may or may not understand options.
How this game is played.
Correct. Not fully understand how the gamma plays out in auctions. And I'm sorry I'm using jargon, and let's not get into jargon, otherwise it'll be too much. But what really we end up doing is not understanding the full implications of writing options.
Yes.
And because we need to square off options at the end of the day, we end up making the losses because we don't have the ability to otherwise fund it.
Yes.
Correct? So now, we have a lot of retail people and a lot of other people who've taken excessive positions than what they can.
Okay.
And that is what results in the loss to the domestic trader and a gain. Now, Indian psychology generally is, how can somebody walk off when lots of gains, but lots of retail people are losing? They are losing because they enter into those speculative activities.
Correct.
On a known or unknown basis.
And Jane Street is smart. It knows how to use the system to make money. Its job is to make money.
Correct.
Now, but this raises another problem. From this individual point of view, Jane Street made money. Many Indian small investors lost money. And the amounts are staggering. Okay? Large. But what is frightening is that when you look at global markets of speculation, India accounts for over 60% of global speculation, even though it accounts for only 4% of market capitalization. The US, which accounts for large market capitalization, has less than 2%.
Yeah, so, a couple of things. So, I think one of the issues that we have is that the growing aggressiveness of market intermediaries. Now, let me explain this concept. Who are the intermediaries in this? There are the exchanges and there are the brokers. The exchanges gain a lot of fees with every transaction and they are more interested in more and more transactions happening. So, as the FNO, which is nothing but a leveraged business,
The futures and
you
options.
don't need to have that much cash to trade it. So, you can leverage many times more.
Yes.
And hence the volumes are higher. And because the volumes are higher, the exchanges earn higher fees. So, the exchange is happy. Then we had, by the way, very mushrooming growth in the brokerages, especially the online brokerages, which said, trade for a fixed price, zero commissions, etc. Come and trade. I will give you a very low brokerage charge. But then the volume spiked so much that the brokerages started making phenomenal amount of money. So what happened is that with the advent of online brokerages, especially during COVID time, by the way, when lots of people said, let's migrate to stock markets, we're sitting at home, let's make money on the stock market. That's the way to do it.
Correct.
And after COVID, people did make money because the markets had fallen significantly. And thereafter, the markets rose significantly. So a lot of people made money. The experience is very good. And hence, more and more people started getting attracted to these markets. Now, when more and more people started attracted to the market and success stories grew, more and more gullible people also started coming into the market. So it's a combination of yield-hungry Indians who said, let me try and maximize my wealth through the stock markets. And of course, the whole positive India story, which is not fake, it's real. But the positive India story that goes with it acts as a catalyst. So a positive India story, market intermediaries who are all available to offer you the product, and the hunger that COVID gave us in terms of trying to maximize our yields has resulted in where we are.
Okay. Now, since you want to create the optimism about India, this is where I have another problem. If Jane Street was a problem, which the regulators allowed, in America, small people are not allowed in the F&O market, in the derivatives market. Big people must play with big people. India allowed small people to get exploited, big people to make money, to push up the markets and create an illusion that India had a vibrant stock market. That was one. Now we're doing the same thing again. Name the financial institution in India. They have invested in the market through mutual funds directly, and the market is high. Now, you'll say the market is high because people like the market to be high. But my question here is that promoters are selling their equity stake in India and buying equity stake overseas. If the promoters don't have confidence in the Indian market, how is it that the small guys been persuaded to invest in the Indian market?
So again, a larger cycle, Bhaskar.
Yeah.
So I take some of your points. I don't think it's all of a sham. So one, let's take the regulator. I think the regulator has increasingly and regularly upped the limits of ticket sizes, up the margin sizes. They have done that to some extent. Have they done enough? Possibly not. Now they have to do it gradually because the ecosystem is there. There is a support to the ecosystem, there is pressure from the ecosystem. There are brokerage houses, there are exchanges, there are various market ecosystems. And as a market develops, you will have to make sure that you will take baby steps forward. So I think imposing very significant margins to say only the big guys can trade with the big guys on day one would have killed the market.
Okay.
So I think there is a combination, and you got to give it to them. It's balanced.
No, but they allowed it to grow.
I agree. So that's what I'm saying. So it's
now they're correcting it.
So hits and misses. They're hits and misses. It happens, right? Everywhere, in every business, we allowed our banking system to grow to such an extent that we had huge NPLs. So it happens. Bubbles happen in India. So India is all about bubbles because our economy is of a size where bubbles can get easily formed.
Yes.
It's what China was in the earlier phases of real estate. It happened. The bubbles can get easily formed. And those bubbles have to be dealt with. And the only way to deal with is not completely cut off the markets because that won't be right.
But gradually
try and do something. So I think that's what the regulator is trying to do. The regulator is trying to make sure that amends are required and those amends will be made over time to do it. Local institutions have to come up to it. So for example, why would a LIC or a PFRDA or etc. So large institutions, State Bank of India, have active derivative trading desks?
Yes.
So if they have it, if our institutions have it, large brokerages have their own institutional trading desks, then they can do it. So they can bundle a product which is less riskier for the retail investor, but then they manage the risk. Like mutual funds, right? What are the mutual funds? Individual people put in the money, pooled capital is played with in the markets, in the cash markets.
Yeah.
Why can't we have something similar? And this is just thinking aloud, where there is an institutional layer which understands this market, rather than expose it directly to the retail guy. So if we are able to form something like this, and I think in due course it will get formed. How did Jane Street got formed? Where is Jane Street's money coming from? Ultimately, there are a bunch of people who have pooled in capital to help Jane Street manage their money. But they're going to play directly in the Indian market.
It's like that brilliant statement you made on social media. Jane Street beats Jane Street. A wonderful statement. I like that statement. You effectively let speculators come in, play to the greed, and it made money. So what Jane Street did was legal in its own way.
It is.
But is it desirable at the economic level?
Possibly not. And should we be making sure that we deal with this over a period of time? Yes, we should.
Because we're losing foreign exchange. As a country, we're losing foreign exchange.
I think we're draining capital more than foreign exchange.
Draining capital, yes.
So the larger issue is that, if somebody gains at the cost of some people losing here. And we really don't want our retail investors to lose. Though, by the way, we have to get rid of this so-called socialist attitude of how can somebody else make money. I think it's perfectly fine if somebody else makes money, as long as it is not done at the cost of our ignorance.
And where the small investor stupidly mortgages his own money and prevents investments at home.
Absolutely. No, absolutely. So I think there is a issue here which needs to be resolved. I think it's part of the maturity of the Indian markets, and we will do it over time. Good that has come up, good that has been highlighted. It will force some action
Yes.
And if there is so I believe that there needs to be a reasonable mediation between the two, where an institution like SEBI gets the kind of funds to be able to implement the system it needs to.
And the need to even control this over speculation in India's market. Even today, this
Absolutely.
bubble needs to be
Controlled.
burst. If not burst, at least
Controlled.
deflated,
In my opinion,
little controlled.
If you burst it, there'll be a problem. There'll be many more losers.
So control it.
Yes, absolutely. Absolutely.
Okay. Thank you very much, Abizer, because this is what we need to understand. Playing the markets, when governments start playing markets, it's dangerous for the entire economy.
Agreed.
The government ends up bankrupting India.
Lessons learned. I think we've learned many of them in the past. We continue
And we
to
need
learn.
people like you to educate everyone else.
It's a pleasure to express my views. Thank you.
But thank you very much, Abizer. It's always good to listen to you, always good to learn from you.
Thank you.
Wonderful. Thank you once again. You'll find us now every morning at 8:15 a.m. on weekdays, where we come out with daily news, or better still, news behind the news. Do watch it.